Hey guys, what's up? Welcome to another episode with me, Shashank Udappa. And in today's episode, I'm going to talk about why I don't like buy and hold forever. Now, look, I have two different styles of investing that I run. Okay, one is a long term style of investing, which is a compounding style of investing, and the other one is a quant momentum style of investing. This is what I basically do for my customers, which is both my small cases that are there. We have a quant basket, which is obviously beating the index, and we have a C basket, which is compounding basket, also beating the index. In fact, most of our baskets are beating the index, touch wood. But that's not what I'm talking about. I'm talking about the whole strategy of buy and hold forever. Somehow I don't believe in it. I'll tell you why I don't believe in it. Because let's say you had invested in 2020, 2021, most of those stocks don't rally today. Okay. The buy and hold philosophy basically says that you have to stay invested for a very long period of time and you have to be invested and don't look at it and just continue because it's easier said than done. And I do believe in buying and holding, but not forever, because I'm going to tell you in today's video what I basically have changed my strategy a little bit into. First things first, what I believe today in today's market, why buy and hold does not work is because the themes are going up very fast and they're dying also very fast. Okay. So if I am investing because of a particular theme, and let's say I want to hold for 10 years, the entire theme plays out in a maximum 4 to 5 years, and I can get all my returns that would I have got in 10 years, I would have got in 4 5 years. That is what I've been seeing. For example, let's say this whole AI theme, right? In US, I was playing a lot of AI, and literally the AI stocks have gone up 10x in 1 year, 10x in 3 years. Right now, technically, buy and hold says you have to stay invested for a long period of time. But whatever I wanted to get has been achieved in 1 year, 3 years, 5 year time frame. So what is happening right now is because of the liquidity in the market, so much liquidity in the market, the cycles have become faster. So cycles works in both ways. Please understand, cycle going up also is faster, going down also faster. I'll give you another example. If you remember, recently we had the whole PSU rally, okay, public sector bank rally. All of them were sitting at 0.4, 0.5 price to book, and then suddenly everyone started going up. Now, what happened with the PSU rally? Fundamentally, nothing has changed, right? If you talk about financialization of India, that theme is still active. But what happened is most of the PSU banks rallied so fast that they gave almost 100% returns in a single year, including SBI went up 30-40% in a single year. SBI doesn't go up 30-40% in a single year. So SBI usually goes up 30-40% maybe in 2 or 3 years. But what has happened? Within 1 year, you've got your entire returns. So this is what is happening. The cycles have become very fast. Now the cycles have become very fast. I cannot stay invested for a long period of time. I have to jump in the cycle, stay invested till the cycle works, and get out of the cycle as soon as the cycle fails. Now obviously that means it is more active management as compared to passive management. Obviously active management is very hard, and that is a problem. Second, the reactions are also coming very fast. Let me give you an example. Let's say today a company gave 20% top line growth. Okay, suddenly the stock, ideally which should go up, let's say 20% or 25%, goes up 75-80%. And this is only because of liquidity. Because what happens is the stock will give 20% return. Then everyone on Twitter, YouTube will talk about it. Then after that, everyone will start buying in FOMO. Then you have your institutions, DII sitting with so much cash that also want to buy. And then the stock just shoots up to 80%. And I'm done, right? Because people tend to forget that if you get 12% return, that is great compared to 1 year returns kind of a thing. It's absolutely great. Now, there is a concept of let your winners ride and all, which I will come to next. Now, the third problem that I have with buy and hold is buy and hold automatically means you have to see minus 50% dip in that stock. Whether you like it or not, if you are playing buy and hold, if I open any stock today and show you, they would have seen massive corrections in the past. Obviously, they've created wealth over a long period of time. You take your Reliance, you take your SBI, you take anybody, any big name, they would have seen instances where it is going up, and they will also see instances where it's gone down almost 50% and then again goes up, again goes down, again goes up. That's how it works, right? But you like this part, okay, and you hate this part, including me. I don't like my stock going down 50%. Now that means if a stock goes up 100% and then falls 50%, it's pretty much the same, right? Because it goes from 100 to 200, and from 200 it falls back to 100. You're back to break even. Right? So this is another problem. So how have I changed my situation, or how I have changed my trading style? I will talk about it, or investment style. I'll talk about it. First things first, I'll give you a full approach to this. Okay. First things first, my screening philosophy has become very clear. What do I mean by screening philosophy? I understand what are the themes that are playing out. I don't know how long these themes will last. You don't know. I don't know. Both don't know. But we know some themes are there. Okay. We have your AI. We have data. You have pharma, data center. I mean pharma. You have healthcare. You have some in FMCG because of the inflation play. Little bit has to come here. And you have a value migration play happening from petrol to EV or diesel to EV. It's happening more in the two-wheeler market as of now. So this is what I am seeing right now. So I want to play only these stocks. Now I will go to other places. I will go to chart maze. I will check it here as well. What are some companies that are near 52-week high? It says healthcare is here, financial services here, diversified capital goods are here. I'll check what are the highest relative moving strength. It's saying capital goods. Capital goods again is looking at power and power equipment. Power equipment matlab AI theme is again playing out here. If I open the charts, right, you will see all power companies are flying, all flying power companies. Literally every power company is flying. Why? Because the whole AI theme is still playing out here. The power theme is still playing out here. So at least I know these are thematic, but I'm not stupid, because you might say that, oh Shashank, see, it has already gone up so much. If you invest now, you will be in loss. I will play the theme as long as the theme is playing. I will play the theme until the theme throws me out of the play. Okay, and I'll show you how that would do. Apart from this, I also check the RRG chart, which is very important. So RRG chart for me gives me an indication of what themes are looking very interesting to play. So if you see in the leading space, okay, if you see in the Nifty 500 benchmark, you see the leading space. I can clearly see that Nifty Bank is coming back up. Nifty Banking, private bank, public bank, and PSU has come back into leading. I don't even think half of us knew this, right? Tourism, financial services, and basically consumer durables are also coming. So technically, if I look at it, pharma has apparently gone out of fashion. So technically, if I look at it, Nifty PSU bank is and private bank is leading. Now, if I click on private bank, let me see what are the stocks that are leading. It shows that Kotak Bank is leading, ICICI Bank is picking up, Axis Bank. That means, can I say the revival of the old? Let me see how Axis Bank looks like. Okay, so we'll go back to trading view and we'll check all these three companies. Let me check it out. I'm just showing you my framework just for you to learn and understand. So what is happening with Kotak Bank? Is it actually okay? Last 1 week it is. Now let me do weekly chart here. Let me do Kotak, and is it coming in the week? Yeah, weekly chart is doing well. But somehow I'm not convinced of this theme. I don't like this theme so much. I'll still play power theme. I will still play the pharma theme. So somehow I am not convinced, even though the RRG chart is telling me that this is the theme, I am not convinced with this theme. So I will only go and look at my sector analytics. I will look at relative strength, which still tells me capital goods, mining, healthcare are there. If I look at healthcare, I can check pharmaceuticals. It is automatically going to tell me what are some companies Sakar Healthcare is doing. They have massive underutilization of capacity. Obviously, I've done some fundamental analysis behind them. It looks like HVY has also come in here. That is highest volume in the year. Rubicon looks like it's moving up. Zim Labs is moving up, but these are all small companies. Supriya seems to be making a delayed PED. Again, HVY, highest volume in the year, and it's moving here. KPL. So this is basically how I would want to first identify these companies. Sai Life, look at this, beautiful. So this is how I would identify those 4-5 sectors to invest. Then I would check, are they in momentum or not? Now this is very important, because whenever I want to invest in a company, I want to check their momentum. Okay, and I will also keep the exit based on the momentum. Okay, now let me give you a simple example. If I take a company like, let's say, let me see some interesting. Let me go back to capital goods, which is trending like crazy. And we say industrial. Let's do this. Let's go here. CP Plus has gone so fast, my god. Okay, Kirloskar. Okay, I can show you actually with Power India only. Hitachi. Let me go to trading view. So this is trending. Now, I don't know when to enter, when to exit. Even you don't know when, because there is no perfect time to enter, nor there's a perfect time to exit. But I know this is in the thematic space. This is weekly chart looking beautiful. This is the daily chart. But I know this is in the theme. Right now it is going up and it is in the theme. So here what I will do is, we will take the help of moving averages. We will put a simple 20, 50, 100, 200 day moving average. And here I will keep my exit. Okay, I will keep my exit only based on the 200 day moving average. I will only play the 200 day moving average game here. I will keep my exit only here. That means if I'm investing here, I will play it until the 200 day moving average gets broken. As soon as the 200 day moving average gets broken, no problem. Theme is great. I will just move on to another company that I feel might do well, right? So I will just play from one point to another. Basically, I'm just doing jump, 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 hop, skip, jump. I will just play from one point to another in the 200 day moving average, right? If I go here, click on electric equipment, click on charts here. So let me give you another example. You can see Precision Wire is also looking very good. TD Power Systems actually is a very good company, right? Because I know that they're packed for the next few years. Now look at TD Power Systems. If you had played TD Power Systems anywhere, right, you would have exited basically at this time, right, over here, and you could have re-entered again at all-time high breakout, right? And in the past, if you had bought it, let's say if you are playing it in the past, you look at this, the past, it had broken 200 day only here. So technically from 200 day, if you're taking it at all-time high, not at 200 day, and exited at the next 200 day, you would have made 178% return. Now, this is two-factor approach, right? One factor is the sector trending? I'm looking at it, answer is yes. Is it in stage 2? That means stage 2 means it's growing. Stage 2 is Stan Weinstein, it's growing. So answer is yes, so I'm investing in that. Third, my exit criteria is a 200 day moving average. No problem, I'll move on to the next, right? How do I do the portfolio analysis here? Let's say I have 1 lakh rupees. I will take maybe 12 stocks at maximum. 12 to 15 would be my maximum. which is equal to 7 to 10% in each stock, depending on how important I think the theme is. I have 5 themes to play, 5 to 6 themes to play. That means each theme will have 2 stocks to play. That's it. I have to just play 2. That way, what happens? I'm automatically invested in 6 different themes. Okay. I'm playing momentum across. Okay. And I'm playing fundamental momentum. Basically, I'm playing techno funda. Okay. And I will exit as soon as it breaks the 200-day moving average. Now, I don't want to optimize key top pe nikalo, bottom pe nikalo. मेरे को नहीं आता top, bottom. I don't know what is top. I don't know what is bottom. I will stay invested until the chart tells me to invest. The minute the chart says, okay, Shashank, I think you're done. Please get out of here. That time I will say, sorry, thank you very much. Get out of here. How do I screen fundamentally strong companies? I had recently made a video on the screener, but let me show you the screen I basically use. I call it undervalued moving gems. Let me explain this screen. I've already done a separate video on it. Market capitalization greater than 5,000. Return on equity 15%. Matlab 15% return on equity is very high. Return on capital employed also 15%, very high. Debt to equity less than 1. That means quality is there. EPS growing last year to this year growth. That means quality is there. Last 5 years sales growth is 12%. This you can even make it 3 years, but you can do 5 years. Anything works. You can even do this. Okay, but I'll leave it to 5 only for now. Sales growth last 3 years. Let me try this. Greater than 12% means it is growing above market rate, right? If the stock price grows sales by 12%, then the stock price will go up more. Then I've said P ratio less than 60 to get quality. You can even make this 40 to get real quality. And then I'm saying return over 1 year also 10%, above 10%. That means the market has not given 10%, but I want the stock to be giving 10%. Now you run this entire criteria. What happened to this? Unknown 12 return over 1 year. Oh, I didn't put and here. Okay, chal. Now you will see 34 companies पे मेरे को game खेलना है. And इसमें I want to see, I told you pharma is something I'm looking at. So I will look at Lupin. I will look at Glenmark, Ipca, Ajanta, MCure. So many pharma companies. Kaplan Point. EV is doing well. So Shriram Pistons comes here. FMCG, CCL Products is coming here. Again pharma, again healthcare, again EV. So I will start going through only 20 companies to go through, and I will see which companies are going up, because all these companies have given more than 10% return in the last 1 year. That means most of them I'm assuming are trending. So I will try to find companies that are basically trending and I will stay invested in them until they are trending. If they're not trending, sorry, tata, bye bye, see you. If it breaks the 200-day moving average, I'm not there. Ideally, I want to buy companies that are breaking all-time high and are in some visible momentum. For example, something like this. I don't hold this stock, but I'm showing you how I would look at companies. I would like to take a position somewhere here when it breaks all-time high, because I believe that when it breaks all-time high, usually it goes and makes new all-time highs. So that is the assumption here. But this is why I don't like buy and hold, because buy and hold means 50% drawdown. Mentally, I cannot see. I will take panic decisions and I will exit. So I wanted to make a system that works really well for me. Again, for you, buy and hold might work. For me, it doesn't work. So I'm playing this kind of a new strategy, and that is why I believe this is a strategy that can work. But again, if you have any doubts, any questions, please let me know. And if you have watched this and learned something from this video, click on that subscribe button, which is that red button, because it helps me grow this channel and I can actually give more value to a lot of users. So this will help a lot if you just click on that subscribe button. And again, I will see you guys soon, because my name is Shashank Udappa and I am here giving you knowledge again and again. Thank you guys. Take care. See you. Bye bye.